Hi everyone, my name's Tim, and on today's episode, we're going to have a look at what causes the Bitcoin cycles. And I've got an alternative theory to the Bitcoin halving, and also when people measure the cycles from the bottom. I've got another theory, and I think this particular theory has a lot more evidence supporting it. So I'm really excited to bring you this information. And essentially, I've got 70 years worth of data here. So let's get straight into it, okay? So what we can see on the screen right here is the Bitcoin chart. We can see here we're down at not 19, we're here down at 2013. So there's a peak here. We had a mini peak there as well. We had a peak in 2017, moving into 2018. We had a little peak here, 2019, and now we've got a peak here in 2021, which everyone is well aware of, okay? So what I'd like to draw your attention to is these dotted lines here, the red ones. These are the Bitcoin halvings. I can see why people see a correlation between, okay, the halving occurs and then we have a big run up. Yep, there's the halving and then we have a big run up. Halving and we have a big run up, okay? But what's also very interesting here is that the Dow Jones and the stock market in general, and we have to remember that the stock market is much, much bigger than Bitcoin. And the way I like to describe it is that the market in general is like a shopping mall, and Bitcoin is like one little shop in the mall. And the Dow Jones is a group of shops, and they're in their own little section and so forth. And if all of a sudden you advertise the shopping mall, then all the markets, all the assets in the market all improve at once. And then if there's some sort of problem with society, there's like a pandemic or a war or just financial strain for whatever reason, interest rates are higher or anything like that, then all the shops and therefore all the assets in the shopping mall go down together, okay? So we have to think of Bitcoin as being part of the overall market and not just its own little thing, its own little bubble that's got nothing to do with the rest of the market. So these dotted lines here show us when the Dow Jones bounces. And there is a very clear 4-year cadence for the Dow Jones. No, check this out. This is 100 years worth of Dow Jones, okay? And I just find this fascinating. So what we can see here, the shaded area is the 30-month moving average. And you can see we bounce off it exactly every 4 years. If you check out these dates here, they bounce every 4 years, okay? It's been happening since, this is 1950. We had a period here in the 1960s to 1980s, and it runs up here, and now we are in the 2000s, which started here. 2000, we had the dot-com bubble, and the dot-com bubble is more obvious on the NASDAQ, and I'll produce a video about that. But you can see here we bounced down here in 2000 or 2000, just at the 2000 mark. We bounced down again, 2008, 2016, and then we had 2020, the COVID crash. It's almost like clockwork. It's actually quite incredible. Now, I'll zoom in to show you this in more recent times. So again, this is the same graph, but a lot closer up. This is the Dow Jones, okay? So you can see here, 2008, we bounced off, or I shouldn't say, we kind of bounced off the moving average, but then we collapsed through it and had the financial crisis, which was a 50% drop. So that was quite devastating. But then we came up again and we bounced back at around the 2011, 2012 mark. Then again here at the 2016 mark, and here again at the 2020 mark. So with a little bit of speculation and 70 years worth of a trend, you'd have to say the next scheduled bounce will be around 2024. Now, do we crash through it like we did last time, like we did in 2008? It's quite possible, and I'll produce a video about that and just various speculation about whether we crash. But whether we crash or not, it's very likely that we continue this trend of every 4 years we bounce, okay? Now, going back to Bitcoin, let's have a look at the dates of the peaks and see how far away they were from when the Dow Jones touched base, okay? So back in, this is the Dow Jones here, touch base around the September 2011, and you can see the first peak here is around 1.55 years since the bounce. And then the second peak was about 2.2 years. And then you can see that we never really had time to do another peak. You could almost argue that we started on our way up there, but what would have happened is the Dow Jones would have gone crash, and that would have sort of hit that on its head. Okay. So then let's have a look at the 2017 peak. So the Dow Jones bounced around the start of sort of end of the year, so the start of January 2016 or so, and the peak was 1.97 years from that date. So that's actually quite similar to the date range we had here. That was 2.2 years and a 1.97. So almost right in the middle of the 4-year cadence. So if we drew the Dow Jones, it would look like that. Oops. It would look like this. Bounce, bounce. And then if we do another 4 years, bounce. Okay. So both those peaks are right in the middle. And then we happen to have time for another peak to happen here in 2019. And that was 3.48 years from the start, and obviously half a year away from the end. So that again could show why it got hit on its head. It was starting to go up, but then the Dow Jones and the market itself was going down, so it got hit on its head. So this is what's really interesting now. So because of that, this time around, the peak is only 1 year from the Dow Jones bounce. Okay, so there's plenty of time here for us to have another peak. It could go high. We could have a lower one. It could be something like that. We could have multiple peaks. Anything could happen, but we've got plenty of time before it hits its head. Do we have a crypto winter and then it tries again and then hits its head? We don't know. But what we do know is that there is plenty of time because we're only basically 1 year in of a 4-year market cycle. Okay, so the next thing I'd like to show you just on this topic is at what point does the Dow Jones start coming down? So let's have a closer up look at the Dow Jones. So I can see here, let's measure, this was the peak here leading before the 2011-2012 bounce. It was about 155 days at the peak before it started to go down. And then before 2016, it was about a year before it went down. And now in December 2019, it was about 91 days until we crashed down for the COVID crash. So as you can see, it's relatively close, within a year at most. So we have at least a year at most before the Dow Jones will start crashing down. So a year would be 2023. So we've got plenty of time before 2023 to start to have another peak, and then it could potentially crash down. Now I tried to figure out why does the Dow Jones, and going back to this 100 years worth, why does this happen every 4 years? Why is this the case? And it's very interesting that it's exactly 4 years, almost to the dot. And we've seen Bitcoin, and Bitcoin has existed in this last little section here since the financial crisis in 2008. This is where Bitcoin has existed. And I'm going to produce some videos on what might happen in the next decade, because you can see clearly here, the market tends to go up. So in this case, 17 years up, 17 years sideways, 17 years up, 11 years sideways, 11 years up. What's going to happen next? So that's a bit of speculation there, and I'll produce a video and show you using the data that we have back here. I'll use some data to try to extrapolate what might happen. But I was trying to figure out what happens every 4 years, and this is purely speculation, and it may not be true. But I had a look at the US election calendar here, and you can see this column here. This shows you when the presidential elections occurred. And they always occurred in November of these years. Now, these do line up exactly. Now, again, correlation does not necessarily mean causation, okay? But you can see here they do line up quite perfectly in recent years. I went back through history and I double-checked these dates as well. And interestingly, we tend to peak going back into the 60s and 70s and so forth, we tend to peak in the middle of these cycles. Like, for instance, I think we peaked around 1970. So we go back to the Dow Jones. I believe there was a peak around 1970, which somewhere, I think that's about 1970 there. So again, this is purely speculation, but I'm wondering whether the governments leading up to an election are promoting businesses, and they're basically handing money out and providing money to people and businesses, so people feel happy and they feel rich, and therefore re-elect that particular president. So that's a particular theory I've got. It may not be true. I was just trying to find what happens on a 4-year cadence that could potentially affect the stock market and the markets in general, and therefore crypto in general. And to me, this is a very plausible theory, and I'd be interested to see if anyone has any thoughts on this. It may not be true, but so far, this 4-year cadence does have a lot of confluence. We've got the presidential cycle, we've got the election, or they've got the presidents trying to, they want to be re-elected. We've got a stock market that also has a 4-year cadence. We've got Bitcoin that has a 4-year cadence, and crypto in general. So anyway, that's a few things to think about. And again, there's a little bit of speculation, but this is using data from several decades, almost 70 years worth of data, to try to work out what is happening with Bitcoin and why is it doing what it's doing. So the good news is we've got plenty of time here. The bad news is that, and I'll produce a video on this in the future, if we take a closer look at the NASDAQ, it is looking eerily similar to the 2000 dot-com bubble, and we're not quite at that stage yet. And the bubble did burst around, and I'll do this in another video, but it basically crashed down on the 4-year cycle. Okay, so maybe somewhere in here is where we have a crash, and at the very least, we're most likely going to bounce, but we could fall through if things get out of control. And I'll produce a video on that. So there's good news and bad news. I think it looks very promising for Bitcoin based on this. I was thinking that we're going straight into a bear market forever, and I think we probably will go into a bear market. But I think there is time for us to bounce back before then we get hit on the head and come back again. And the question is, do we do a double top? Do we do a higher all-time high, or do we do a lower all-time high? I think we've got time. I think we've got time to at least do a double top, and we have potentially time to do a higher high, and before we get hit on the head with the markets before the next cycle. Again, it's all speculation. This is not financial advice. This is just a theory based on the data. But I hope you enjoyed the video and were entertained. And hopefully it helps you. It's helped people think about things in a different way. And if anyone has any other theories, please comment below. So anyway, I'll finish the video there. My name's Tim. Please subscribe and comment if you like the video, and I'll see you in the next one. Cheers.